This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. I'm Nathan Williams. Joining me today is Jag Singh, the founder and CEO of Vid. Vid is an online video journal that is decentralized on the blockchain. Jag, thank you so much for joining me today.
Hi, thanks for having me.
Tell me a little bit about Vid. Why a decentralized video journal?
Sure. So Vid is a memory media platform. I would say it's semi-decentralized. Really what we're using the blockchain for is just a transparent transfer of value between advertisers and users that want to monetize their data, and also between the platform and creators, because a common complaint on YouTube and other platforms is that the whole algorithm is rigged. A human picks who goes on the trending page. Different creators are put in different ad bands. People are basically earning different amounts, and it's just not transparent. The whole process is very opaque, and we obviously see an opportunity for disruption there.
That's interesting. So if you're talking about specifically the monetization algorithms and how do you choose whose videos should be trending and whose should not?
Exactly. So on Vid, everything is purely that all that will be open source, how that algorithm works, how things are reach the trending page, but crucially how people earn based on views is all very transparent. So the way that it works is the token pool every day is distributed to creators, but it's based on a weighted algorithm based on how many users you brought into the platform, based on your individual sign-up link. So for example, if I brought in 100 users and you brought in 10 users, but we both have 1 million views today, I will earn more than you. And then it's further weighted towards how early you brought in those users. So if I brought in a bunch of early users, I also earn more than you, even though if, for example, we'd brought in the same number of users. So it's really about influencers, and we've got a number of top influencers, sort of 10, 15, 20 million YouTube subscribers that are going to be joining very early on because of this algorithm, because they realize how much earning potential there is there for them. But it's basically, if you bring your community over here, then you've sort of helped create the Vid pie, so you get a bigger piece of it going forward.
That's really interesting because, it obviously has a built-in mechanism to grow the platform quite quickly.
Exactly.
I just wonder though, does that disincentivize later users from joining?
Sure, I think there's still a great opportunity for everyone to earn based on view count, no matter when you join. But I think it's important to incentivize early adoption, also to accelerate growth. Don't forget, the pie is getting bigger over time, so it's always proportional.
Interesting. So tell me a little bit about the monetization aspect. Like, how important is that to people? Like, because when I read your website, it looks very much like a video journal that would be sort of private to me and that I would use to keep my memories and maybe share them with my friends. But are you finding that the idea of putting it public and generating a following and more of a YouTube style system is what people have been going for?
Sure. Well, based on test data, so we launched a previous version of the app that only had sort of 10% of the app built. It was just the AI video editing part of the app, and we got 30,000 users within a few weeks. So, and that was all public. So all you could do there was add raw clips. The AI puts them together into a high quality piece of content, and then you could share them externally, Instagram, Facebook, wherever it may be. So clearly there's a huge demand for that service, for the public side of it. The private journal side of it is really the huge innovation, though, that we think will drive mass user adoption of Vid and then potentially blockchain tech. And I'll just explain a bit about that because people don't really understand when we say memory media. A lot of people, the common question is, what is memory media? So if I said to you, what can you remember from this day last year, you probably couldn't tell me much. And we just think that's a glaringly obvious problem, and we can do a lot better in today's day and age, where all your memories already exist out there in the form of consumer data. You probably just don't realize it. So what Vid does is we're building APIs for every service conceivable. And every time you use a service, say you take an Uber from A to B, you spend on your American Express, whatever it may be, through the APIs, we pull in the simple text metadata from the APIs of your usage of any particular service, and we auto-generate 3-second video memories. And then we populate a video journal, calendar-style user interface, and then that's all secured with zero-knowledge encryption, so that us as the app, we can't see it. And that's the private side of your app, your journal. I'd encourage anyone, because it's quite hard to visualize exactly what will these memories look like and I'd encourage anyone to go to the website Vid.Camera and watch the video. That's the only true way to get an insight or a true feel of how these video memories will come out, and the sort of space that we're creating.
So Vid.Camera.
Yes, correct.
So tell me a little bit, because you say that you use zero-knowledge encryption to store these video memories. What does that mean exactly? Like, how does I'm only sort of basically familiar with zero knowledge encryption. Like, how exactly does that work, and how is it useful in the video sphere?
Sure. I think the main key aspect of it, and the way it's useful to a user, is all of these memories are very, very precious to that user. You don't want a service, especially in today's day and age with Facebook, the data scandals and everything that's gone on. When a service comes along and says, okay, we're now going to allow you to remember every single part of your day, every single thing that you do, you definitely don't want that service having access to that data.
Probably not.
So it's basically, yeah. So it's very, in simple terms, it just means that it's all encrypted in a way that Vid can't see it. Only you can see it. And then when you choose to move one of those private memories over to your public journal or insert them into a public video, then people that are following you can see it, and then Vid can see it.
Okay, because I've normally understood zero knowledge proofs to mean that you can prove something exists without seeing it, or you can prove that data exists without handing it over. So is this zero knowledge proof for taking your personal data and then monetizing it and showing that, yes, it really is monetizable without handing it over? Or am I understanding that correctly?
No, that's not correct. So
Okay.
the only...
I tried.
Sure, no worries. Here, all zero knowledge means here really is that you are able to pull in the data from the API. You're able to view the private journal memory. So you'll be able to see everything in your journal, but us as Vid, we can't see it. We can't see what you've pulled in from the API, etc. That's all it is. So we can't see all the data that you're pulling in around yourself.
I've heard a number of people over the past few years say that the idea of decentralization, the idea of privacy and the lack of a middleman is very popular in blockchain circles, but for mass adoption, the average person cares more about a well-managed service than about that level of decentralization or privacy or what have you. And I'm wondering, how can you move to mass adoption and convince the wider market that a service like this is better than one where the app can actually see the data?
Sure. I think I agree with that very much so, and that's why I would say that Vid really isn't an app. We are not a decentralized. We're really a centralized app that uses blockchain for transparent transfer of value, and also uses zero-knowledge encryption. In terms of user adoption, I think a user will really feel very little difference in terms of user experience between Instagram, Snapchat, and Vid. Everything all the way through to the blockchain aspect is under the hood. It's all hidden. We're very keen on users not even knowing that blockchain's involved, other than obviously the token, which essentially to them, these sorts of tokens are in games and all sorts of things that aren't based on blockchain. So it's just really, it's like a gamification almost. It's just we call them advertiser credits. So essentially the user just earning advertiser credits, and then that advertising credit has a dollar value.
Interesting. So, how important do you think this will be to the industry at large to take similar steps? Do you think that centralized apps that interface with blockchain backends are more the way of the future, or do you think that there's still room for dApps in the mass consumer market?
My view on this is that a team, if you want to compete with Facebook, Snapchat, etc., the likes, you need to have a team that's very motivated, and you need to be centralized, in my opinion. I just don't think that a decentralized community are going to be able to compete in these sorts of industries that are highly, highly competitive. I mean, if you take a look at Steam, for example, they've gained some traction, but they're at about, I think, 100,000 monthly active users, which is really a drop in the ocean when you try to compare them to the social media giants. What you need is Steam. It really innovated on the way that they allow users to monetize, to basically earn for their contribution to the platform. But what it will really take to disrupt Facebook or the social media giants is the Snapchat-esque product focus, but the token or business model of Steemit. And that's where we really see Vid fitting in, bringing in the two elements together, where we can have finally millions of users using blockchain.
Now, I mean, one obvious question that comes up here is, why do you need the token? You know, if you look at, for example, YouTube, they have revenue sharing that is done without a token.
Sure.
Could you do the zero knowledge encryption without the token, and what would you lose if you did it?
Sure. I think the key part of the token is really the transparent transfer of value. So I'll just explain the business model of it. The old social media model was the social media company collects all your data. They then use that data to target advertising to you. They take all of the advertising revenue, and then the system is free to use. The platform's free to use. Vid has shifted that model and flipped it on its head. Here, you monetize your own memories directly with the advertiser. You take the advertising revenue, and then there's a nominal fee to use the service. So for that to all work, for it to be transparent, for Vid to not be involved, then yes, there definitely needs to be that decentralized token aspect.
I think I think that this is something that maybe the big companies are looking at. Facebook, for example, has announced that they're going to get involved more in cryptocurrency. Do you think that the big companies can catch up to a small or a startup company that has this, or do you have the first mover advantage?
We've got the first mover advantage. Also, the way that we pull in simple text metadata and turn it into video memories, we've got 7 patents around that and some of the AI video editing. So we've got some defensibility there. But I think the key thing is, imagine if Facebook all of a sudden said, okay, the service is now going to be, there's going to be a cost to use the service. We're not going to take any of the advertising revenue, and the advertising revenue is going to go to the users. Obviously, the stock would tank so quickly that NASDAQ would have to cease trading, because they'd basically be saying, we're not going to make any revenue from now onwards. We're going to switch our revenue tap off. So I think in that sense, for a giant to flip their whole business model on its head, I think that will be a difficult task. In addition to the fact that no one's going to trust them now. They've got that huge trust problem that I think they're going to really struggle to recover from.
It's interesting because when you say that, I'm reminded very much of the story of Blockbuster, who had the opportunity to purchase Netflix back in its infancy for $1 million. And everyone laughs at them because they didn't do it. But if you think about Blockbuster's franchise model, if they had bought it, they would have been at war with their own franchises. Yeah. So, I can see how the built-in business models of the big giants are the very thing that prevent them from just taking over and doing what you're doing.
Exactly.
Let's talk a little bit about the token. So you guys are doing a token sale, and you're doing it in 2019. How has the environment changed compared to days of yore, back when dinosaurs roamed the earth and it was 2017 and everyone was doing token sales? Is it much more difficult now, or
Yeah.
what's it like?
Sure, it definitely is a lot more difficult. I've written an article about this on Vid Foundation's Medium called, I think it's ICO, STO, IEO, breaking down the sort of journey from 18 to 19 and where we are now. But a brief overview, I would say that the money is a lot less free-flowing. High quality projects will rise to the top, and they are. I think the STOs aren't quite there yet because of the liquidity issues. I think the ICOs, the problem is the advertising cost, the ROI basically. People are having to spend so much on advertising that the ROI is very, very poor now on ICOs because the industry is so jaded and people are so sick of the scams that you have to spend so much to really distinguish yourself from the crowd and bring in funds. So I think really the solution is IEOs. How long they will last is sort of dependent on us as an industry, and if we protect from scammers and bad actors and ensure that the exchanges are. So the benefit of an IEO, of course, is that the exchange has done their due diligence on the project, supposedly, before listing it.
Supposedly.
I say supposedly because I've got offers from maybe 6-7 exchanges that haven't asked me a single question. They just want a fee. I've written another article about this on Medium as well.
So does this mean that we may be in for a repeat of the 2017 with the IEO people?
I believe so.
Yeah.
I think the greed just destroys great ideas. I think the IEO potentially was I think the top 5 or 10 exchanges, they are truly doing deep due diligence into the projects. So I think they'll be the only ones that people trust going forwards. But I think the name probably, the acronym IEO will probably get a bit tainted along the way. Yeah.
Well, such is the nature of any high growth, high potential investment opportunity in tech. I mean,
For sure.
Wasn't even the term startup tainted for many years after the .com bust?
Yeah. I think we thought a bit more about this and how can we sort of reinvent the token sale model in addition to the IEO. So what we're doing is a 5-year token sale. We've seen that companies basically front load their token sales, and even in IEOs, and IEOs have become a bit of a money grab, and then they don't really care what happens to their token. And so this sort of de-aligns incentives between the project and investors. If the project holds on to the majority of the tokens and drags out their token sale over a long period of time while continuing to deliver on milestones, etc., then the project's incentivized to make sure that their token price is high or continuing to increase in price. So we're doing a 5-year token sale on 1milperday.com, and it's just 1 million tokens every single day for the next 5 years, because we really want to show that we've got that long-term commitment and we're here to stay. And we think backloading the token sale is actually more beneficial for the project long-term, but in the short term, it's better for investors. And we think it can, if people adopt our model, it will really improve the industry.
And what's been the response so far?
It's being received very well, very, very well.
I just find this fascinating because I remember back in 2017 when I had started this podcast, and even in 2018, I had talked to a couple of companies that were trying to pace their token sale over a number of tranches, over a number of years, with sort of the mindset that, you know, you hit milestones, then you get a better valuation, sort of like traditional VC. And generally, at the time, the market reacted very negatively. Like they were trying to extract more money out of them, or like they were going to push the price down, because everyone was about the short-term gain. And if people are reacting differently now, are they seeing this more long-term, or do you still see that there's a lot of short-term traders that are getting into the mix?
I think there are a lot of short-term traders in the mix, in particular with IEOs. Because obviously there's that quick 3, 4, 5x pump, and it's something that the industry is used to. But I think that the true enthusiasts, they have long-term visions now. They understand that the tech's going to take a while to build out, that the true value is over several years. I think that there is a small shift there.
So as we wrap this up, just ask, what should we expect in the coming months from Vid? What do you have on deck for us, and how can people get involved?
Sure. So 1millperday.com, our token sale will begin on Sunday, midnight GMT. And the way that it works is every night, midnight GMT, the tokens are automatically distributed to the contributors, and there's no set price. It's basically a pool. Whatever amount of ETH has come in that day, the tokens are 1 million tokens have to go every single day, and they're distributed proportionally to the contributors. And then in a few months, you can expect our iOS app. A few months later, you can expect our Android app, and then the web version. You can expect some big press, a documentary, and some big YouTubers making announcements that they're joining the platform. And it's exciting. A lot of things to come this year.
It sounds really exciting. Jag, thank you so much for being on the show. Jag Singh is the founder and CEO of Vid, and you can find out more on Vid.Camera. Thank you so much for being on the show.
Thanks for having me.